Hey guys, Mike here. So I've waited patiently to do a follow-up video on the Evergrande crisis, and I was just waiting for the dominoes to start to fall, which now they have, just like I said in that video they would, that this is going to spread, and Evergrande does not have to actually fail, right? All they have to do, because they're so large, is put out the notion or appearance that there's a big chance they're going to fail. And there still is, by the way. Because what does that do? It shakes the confidence and trust of that real estate market, which is the biggest in the world. Okay? And don't forget, like I told you in that video, almost I think it's 70% of people's financial fortune or wealth is tied up in that real estate market. Okay, so this affects a lot of people, as you may see people on TV crying in those offices of Evergrande because they have all their money tied up in those properties, those 1.5 million properties that still aren't finished yet, and we don't know if they're going to get finished. So in this video, I'm going to take you through all the other dominoes, all those other property real estate developers that are falling by the wayside and starting to default, and why you're going to see most likely more start to default and basically go bankrupt when it's all said and done. Okay, and how this is affecting the overall market in China and their economy. Okay, and so if you're getting out of it, please hit that like subscribe button for me. I really appreciate it. Helps with the algorithm. And without further ado, let's just get right into this and understand how big Evergrande actually is by comparing it to two of our largest real estate developers right here in America.
Because Evergrande Group is big. I mean, really big. Look at this cool stat from the Wall Street Journal over the weekend. Evergrande Group has 700 developments being built right now. 700. Those are the total size of 513 Empire State buildings. That according to the Journal, thanks to the cool graphic. Remember, that's what's being built now, not what they have already built. And they are funding a lot of that growth with debt. Evergrande Group is one of, if not the most indebted company in the world. But let's put some of those numbers, shall we, into perspective. For example, Avalon Bay and Equity Residential are two of America's biggest real estate developers. They each have about $9 or $7 billion in debt, respectively. Avalon Bay, by the way, has 80,000 apartments. It is big. Evergrande Group has $88.5 billion in debt and $300 billion in total liabilities, things like receivables and companies it owes.
And so hopefully that gives you a great insight as to actually really how much debt this company is and how large the company is. And that's why when something like this happens to a company that size, it sends shockwaves through that industry and the country for that matter. And to show you what I'm talking about when it comes to trust and confidence, when it comes to investors, right, buying the bonds of these companies, I'm talking about all of those real estate developers, because that's the only way they stay in business, right? Here's how if you don't know how the wheel works over there, how it's worked for years. Remember they were building those ghost cities for a long time, like a couple of decades now. And what they were doing was selling bonds, taking loans out from the banks, right, at a low, reasonable rate actually. And then before they even started to build these properties, which take up to 2 years, they would just pre-sell everything, right? And they would sell everything out, and it made it like they were making a profit before they even broke ground, really. And then they would rinse and repeat, right? But people actually they completed the properties, okay? Nobody was living in them most of the time, but they have filled out some of those cities. That's kind of how that was working. Well, now that's all basically grinding to a complete halt. And why? Because look at what's happening to these investors over here. These are the bonds of Evergrande. Look at the red. Look at how far down percentage-wise these bonds are now. And so now you have to ask yourself as an investor, you see these other investors getting burned by this company and the others I'm about to mention. Would you actually buy their bonds, right? No matter what the yield is, would you buy it, right? Would you take that risk, right? You have to have, at this point in time, a very high risk tolerance to actually put your money into these companies, okay? And so that's one thing that's creating this problem for the especially other smaller real estate companies or real estate developers, this is a big problem for them, okay? And you can see right here, this is what I'm talking about when I say the dominoes are falling, right? You got Cynic Holding Group, which is becoming the latest Chinese real estate firm to warn of an imminent default. And it says a Shanghai-based developer said in a Hong Kong Stock Exchange filing it doesn't expect to repay a $250 million bond due October 18th, and that it may trigger cross defaults on 2 other notes. The firm has $694 million in dollar bonds outstanding, according to Bloomberg. And so the firm missed domestic payments in September, sparking an 87% stock plunge then. Then the next one you got is Modern Land, right? This is a smaller developer. They have asked investors to push back by 3 months a $250 million bond payment that is due October 25th this month. Then, of course, there's Fantasia. This company is another Chinese developer. They have already defaulted on one of their bonds, and now they've had 2 directors come out and quit during the Chinese, during this whole mess, because they said they were basically lied to and not informed of what really was going on behind the scenes, so they don't want to be any part of it. And then, of course, we come to Evergrande again, and of course, they had that 30-day window from the bond payment they missed last month. Well, that's coming up due on October 18th to 19th, and so if they don't make that payment, they will officially have really defaulted, because that was their 30-day window. And of course, you know, this is the big thing to look at. Look at all these bond payments that are coming due right here, okay? According to Refinitiv, data shows there's at least $92.3 billion worth of Chinese property developer bonds coming due next year. $92.3 billion. And then just look at the ones that are coming up here right now. You can see the list, got a couple October 15th. That's around, what is that, $1 billion in bonds due. October 18th, $244 million. October 27th. November 8th, November 18th, you just see the hundreds of millions of dollars of these bonds that are coming up. And you see there's Fantasia in December, another $249 million. And what's even crazier, look at November. This is what they call tracking trouble. This is the monthly maturities for Chinese firms that face repayment pressure, right? Total Chinese local bonds coming due that face repayment pressure. Look at November. It's the largest out of anything. So next month, they have even more bonds coming due, and they can't pay the bonds this month. And of course, what happens when a company can't pay their debts? They get downgraded, okay? And look at how high this company, Evergrande, these other firms that have been downgraded are having to pay now to try to actually bring on new debt to continue their operations. As you can see, this is absolutely staggering. This is China's dollar junk bond yields. They're at the highest they've been in a decade. Look at that, almost 17%. So they went from 8% to 17%. Imagine having to bring on new debt at that level right now. And as you can see right here, this is Fantasia's dollar bonds, which plummeted amid their default. And they have a 15% dollar bond due this December on 18th, and then another 7% due on the 17th, the day before that one. And you just see the value has just gone into the toilet. And this right here is what happens when you start to see a bunch of defaults as well. The onshore credit stress levels have gone from 2 to 3, and then offshore has totally almost maxed out. It's gone from level 4 to level 6. That is the highest level. So you can see it's almost maxed out now, and Bloomberg actually compiles this data to get this for us. And of course, Chinese developer credit ratings have been cut at the fastest pace relative to increases since 2016, as a recent slump in new home sales adds to worries about the sector's debt. And so yes, that's right. Not only do you have these real estate developers defaulting on their debt, asking creditors to push back the payments, now they're having to pay more to try to get new debt on to continue operations. But on top of it, now you're most likely going to have less income coming in because home sales have fell off a cliff, and so has new land sales. And you can see right here, year-over-year change in contracted sales in September. And look at these numbers. They are staggering. Negative 24%. Country Garden, which is the largest Chinese developer over there, by the way, negative 30%. Another one, negative 30, negative 33, negative 32, negative 34. And look at this one, negative 41%. And what's even scarier here, you got China Real Estate Information Corp research citing that more than 90% of China's top 100 property developers' sales declined in September by an average of 36% from the same period last year. And they go on to say they had to do a double take when they saw these numbers, because this is actually scarier than Goldman Sachs' worst case scenario. And what's even worse is that this is happening before Evergrande actually truly defaults yet, right? Which will officially be this week if they do. But this is happening before that. And on top of that, you got new land sales in China reportedly going down 50%. Okay, so it's going downhill fast over there, slowing down extremely fast. But now they're finding out is, and this is what we don't know, right? You got Country Garden, which is I believe their biggest real estate developer. Well, they have these deals worked out like companies like Fantasia. They work out off balance sheet deals with smaller developers like Fantasia who just defaulted, right? And because why? Fantasia lied on their financials. They didn't disclose a bunch of debt they actually had, okay? And so how is that going to affect Country Garden? How many of those deals do they have worked out, okay? Because actually Country Garden, it looks okay as far as because they pay down a lot of their debt, but the truth is we don't know because guess what? PricewaterhouseCoopers, which is a major accounting firm, they actually signed off at the end of 2020 on Evergrande's financials and gave zero warning that they were in any risk of kind of default or anything else, right? They gave them a clean bill of health. Less than, what, this has been 10 months, right? And that's a major accounting firm, okay? And so the truth is, nobody knows what's on these financials, okay? And, you know, because especially in the real estate industry, it's easy to make your balance sheet look good. And so, and your income statement for that matter. And so, you know, that's a huge problem that nobody knows what's on these financials for these companies, right? And the reason why it's really risky is because, or for China especially, because they're the second largest economy in the world. By 2025 or 2028, they're supposed to be the largest. But, you know, remember, they've been slowing down for a decade on top of this, but the real estate market counts for 30% of their GDP. When you take into account all the suppliers, the vendors, you know, the construction crews, all the stuff it takes that goes into real estate, 30% of their GDP. And in China, it's all about real estate. Their real estate is the largest, most valued asset in the whole world. As you can see right here, it makes up for $62 trillion worth in China. And when you look over America, it's like 34 trillion in real estate market. Japan's 10 trillion. And so as you can see over here, you know, we're all about the stock market, fixed income, and they're all about the real estate. And so now let's look at what we got here. We got multiple real estate developers either defaulting on the verge of defaulting. Next month, you have 3 times as many bond payments coming due than you did this month. And they can't pay this month. They're asking people to push it back this month. Okay, and don't forget they got that 30-day grace period. So if that happens in November, it goes in December. It's going to be an interesting December for China, that's for sure. On top of that, home sales. You saw the home sales slowing dramatically. New land sales slowing dramatically, to say the least. Right now, you're paying more to try to bring on debt because these companies have to continuously raise money, raise capital. Right, which is why Country Garden has these deals worked out with smaller developers like a Fantasia to help them raise capital. What we don't know is how many of those are in place, right? How many of the Fantasias are out there who lied on their financials and have deals worked out with these larger developers to actually, you know, help them raise capital. That's what we don't know. Plus, you saw all the projects Evergrande by itself has. Now you're going to have other developers who can't finish their projects, right? Who's going to pick them up? Who's going to take that risk? Because to do that, you have to take on more debt, right, to be able to buy those properties. Then you got to pay to finish them out. But if you have nobody to sell them to, right, what's going to happen there? And so it's going to be an interesting winter on top of, you know, what they got going on with the coal and everything else over there. All those energy prices going through the roof right now. And so, you know, this is important to watch out for because this is going to affect the global market as a whole. Okay, it's going to affect Australia, Europe. Over here, you know, I looked at as far as, you know, because Chinese investors love to buy American real estate. They don't own, you know, anywhere near that much, like 34 billion or something like that. It's not even a lot to affect this, but of course, you know, larger places like California, New York, you know, they love to buy that real estate. Doubt they're going to be buying that anymore. And so, you know, I don't think it's going to affect as much. What I think you're seeing, though, is affecting the stock market, right? Because it's creating uncertainty. That's all it has to do is create uncertainty. Nobody actually has a default. Nobody has to go bankrupt, you know, but let's be real. You know, the only thing holding up right now is the Chinese Communist government who controls the banking system by telling the banks, make sure you keep lending the money behind the scenes, of course, but in front of the cameras they're saying we're not bailing them out. Okay, so if they're not bailing out Evergrande, all those small real estate developers, they're most likely up a creek. They're going under. Okay, the question is, how many more Fantasias and all the rest of those real estate developers are there going to be? All right, and then how bad is this going to get with Evergrande? Got to watch October 18, 19. Got to watch all those dates I just showed you. Those are very important dates to watch. Okay, because it's going to get very interesting, guys. You know, we've been through a real estate crash here. It'll be interesting to see how they handled over there. You know, but this is going to be, you know, one of those things where people say, don't worry, they're a real estate company. They got assets. Yeah, but who wants the assets? That's the question, right? I mean, honestly, who's going to pick them up? They're not going to be cheap, and they're not going to get what they're asking for it because you've bought houses and sold houses like I have. You know, if you know you got a desperate seller and they're asking for $100,000 for a house, even though it's a 25% haircut, are you really going to give them that? Of course not. You're going to be lowballing the heck out of them. And it takes time to close those deals, right? And for them to get the money. And so, you know, let's see what happens, but I at least wanted to do the update, bring that to you. I'll continue to keep you updated as this goes on. And, you know, if you got anything out of it, hit the like and subscribe button, share this on Twitter, share it on Facebook. I really appreciate that, guys. And also, guys, let me know in the comments down below what you guys think about the situation, how you think this is actually going to play out over, let's say, the next 6 months, okay? So have a good one, and I'll see you guys later. Hit that link down the bottom, sign up for a BlockFi account where you can earn up to 8.25% now on your stable coins that began October 1st. You can also sign up for that credit card and earn Bitcoin with every purchase that you make. That's what I am doing. And parking cash there to earn that 8.25% as well. And plus you can also go ahead and sign up for any loans you need against your cryptocurrency as well at a very reasonable rate.